Alright, what's up everyone? Welcome back. In our last episode, we talked about the importance of the AM candles, and today we are going to dive into a crucial skill that separates the pros from the amateurs. That is how to hunt wicks for the perfect entries, and this is how you get the best price and maximize your risk to reward ratio. Oops, sorry, there, okay. So what is a wick? A wick on a candle is a visual representation of a price rejection. So those are wicks. Well, you should probably already know about it. So when a wick forms, it shows us where the algorithm pushed the price to grab liquidity, and like a quick trip to hit all the stop losses, right? Before immediately pulling back. So you can see those large wicks. The price went down there and went back up, and they tell us exactly where the institutional orders are placed. So where is the sweet spot? For a long trade, your entry is placed at or near the low of a candle's wick. For a short trade, it's at or near the high of a candle's wick. So like right here, shown in these examples. And perfect wick hunt entry often combines perfectly with a turtle soup or a failure swing setup, because those patterns are themselves a form of institutional manipulation that creates the wicks. So I will not bore you with the chart, with the presentation, so let's move on to the chart, and I will break down this trade just right here. So if you want to trade with the ping pong, standard deviations, rejection blocks, right? Fair value gaps, this is how you do it. I will not talk about this exactly today, but maybe if you are wondering how did this trade work out, right? So exactly like this. So let me move this. So on 15 minutes, we had this huge wick, right? A rejection wick. So basically, if I replay it back like this, if we do see this and we have some right liquidity, also we also have this fair value gap right here. So basically all you need to do is just place a limit order, and if you want to be a maniac and trade like Powell and all other maniacs, basically enter a trade, put, I don't know, like a 10, okay, let's put like, they are crazy, let's put like 11.50, no, let's put a 10 stop loss, right? Like right here at 10, if I can, there. So exactly at the middle, so the CA is consequent accruement. We don't care really about this fair value gap, but also if shut down. Okay. So basically you put a limit order, then you just play it out. There you get hit, and your take profit gets hit, right? But it almost edged stop loss for 50 points, right? Or shown us right here, also the middle. Basically this is a ping pong, right? So let me move this back. So we had this fair value gap, right? The middle, boom, take profit gets hit 1. Put another limit order right here, 10 point stop loss, and target the opposing liquidity. So basically you get into a manipulation, right? You enter on a manipulation, take profit, and enter on distribution. And if I play it out, right, your take profit would have been hit, and then your stop loss. And yeah, it basically goes up. So let's maybe go and see what happened yesterday. Right, we had the 2 a.m. Okay, this just looks pretty good. So again, 2 a.m. right here, we have this range. Let me replay it like this. Let's go on to 5 minutes. Wait, what's happening? There. So there we go. We had this high right here. This also would be an entry done the same way, right? Short limit, and yeah, you could have gone crazy, right? 3 points, let's say 10 points, and targeted the opposing liquidity, right, for a 4. But what happened here? So we didn't take this wick out, right? We took this one. So the next candles, they do their thing. What happens right here? A turtle soup, right? What do we have right here? Have a new candle. Oh, let's actually play it out and see. I already see a trade. And there you go. So we had a turtle soup right here. What happened here? We had an intra turtle soup. If I have them. So TS, intra turtle soup. This one is, and this one is just a turtle soup, right? And then yeah, it's just distribution, and yeah, you go down. And if I go right now on a chart, the range has been completed, right there, like this, right? And here, if I take this rejection block again on just 5 minutes, what is happening again, right? Long position. Again, same thing. I don't know. 6 points stop loss and 40 points take profit. Right. Tapped in. It doesn't even go to the drawdown, right? And or take profit. Gets hit. So that is how you can hunt for the wicks. Also, I mean, you have to put more confluences into it, but that is not for today. And then let's go. Maybe we can find another example for the wick hunting, right? So you can use fair value gaps, rejection blocks, order blocks, opens, key opens. And okay, yeah, okay, so we are on 4 hours. Let's see, this range didn't work out, but what's this, Tuesday? Okay, so let's say this candle closed. Wait, no, okay. Let me replay it a bit better. Okay. Again, add confluences, right? Bigger time frame, fair value gap respected. I'm respecting these fair value gaps, so why would the price even go down here, right? And I mean, if I play it out like this, I'll just put this right here. Let's go on to the 5 minutes, right? Oh, we had new. Okay, that makes a lot more sense. But let's play it out and see what happens. Right. We took the data lows. I guess this was news, right? This was news. Took the data lows. And yeah. Okay. Let's see how we could have hunted a wick. So where is market open? 9:30, right? Okay, you know what? No. Okay, let me just talk this over. So another one, right? This is something I haven't talked about. Well, I have talked about it previously, but I just didn't create. I had a video, but I removed that video because I just didn't like the video. So key level right here. So we mark out from 7 a.m. till 9:30 a.m. the highs and lows. So we had 7:15, this low right here. Where's our highest point? This one right here, right? So this high gets taken out, market opens, hops into and takes out the 7 a.m. low. Right, maybe if I drop down to 2 minutes. I mean, it's just another way to trade, right? We had this block right here. Price tapped into it, went up. So basically, right here, right? Take the fib, low, the high. Price tapped into the 69 zone. There's our long. That's a wick hunt. Put our stop loss right here, or at the one, and target the opposing liquidity. Right, I took this trade. So I think I have talked about this one for many times. Okay, let's actually go to a random bar and maybe we can find something better. Same thing again. 2 a.m. What is happening? Right, we are in a bearish trend. Boom, we had this for value gap right here. Boom, entry right here. Boom, short. So we inverse this for value gap. We have these lows right here, right? Let's go on to 15 minutes, 10 a.m. This is 10 a.m. Go on to 5 minutes. Let's play it out a bit. Right, we took this low. Let's go again on 4 hours. I already forgot the next candles. They're bearish or bullish. Okay, we are also inside of this for value gap right here. Hold up. So I can go to 4 hours. We need to look at these down here. Right. I mean, it doesn't seem that the price wants to do. I think we are kind of chilling in this fair value gap right now. I mean, there could have been a possible entry, right? Again, 50% there. See, price tapped exactly. The consequent encroachment went up. Okay. But I want to see the price get into this level right here. Okay, so we completely disrespected the fair value gap. Let's look on a bigger time frame actually. Right, there's nothing much happening right here. It's just going to be bearish. Okay, they opened up, but so these are the do's and don't, right? So do's, so do, okay, do, don't, do, enter on distribution, don't enter on manipulation, except if high experience, right? If you can catch the manipulation moves, then yes, you can enter, right? 20, 20, but my suggestion is to always enter on distributions, right? If you miss the trade, don't just take it, okay? If the market is not giving anything you, and you're like, okay, well, it's probably going to go higher, right? No, that is not what you want to do. Do enter on per value gaps, projection blocks, per blocks, turtle soups, right? This is how you want to find your entries using these confluences. Best suggestion would be just to look for turtle soups, right? If we are watching a chart, and you can't see anything, right? Accumulation, manipulation, distribution, right? You want to enter right here after the turtle soup. Yeah, the turtle soup has happened. Maybe an intra turtle soup, maybe an SMT. Right, actually, I forgot. SMTs. That is also good. I cannot write anymore. Right. On SMTs, we can also enter. Right, if let's say this happened, right? The ES took the low. We have an SMT right here. We are entering after ES starts reversing, and so like right here, putting our stop loss again below the Wicks and targeting the opposing liquidity. Order blocks. Oops. So maybe you have order blocks 50%, enter on it, limit, whatever. For value gaps, right? This for value gap again, 50%, because we don't want to see the price close after the consequent encroachment. So if price does close like after this middle line, like right here, I would not be taking that trade. But either way, right, if I am entering aggressive like this on trades, I am not going in with my full port, right? If I have a, let's say, a 50K account, I am entering with $200. If I lose, I enter with I enter with $100. If I lose again, no trade. Lose again equals no trade. So this is only if you are trading aggressive, but if you are new, don't even try to do it, okay? You will lose accounts, you will lose your money, you will lose your mental. So just stick. Okay, even if this happens, right, we get a closure above, we get an extra confluence, right? Because what can happen, okay? We can enter a trade like this, right? We enter a trade like this, price starts to go up. What's the next thing? Our stop loss gets hit and the price continues to go downwards. So you need to be really careful about it. But that is basically how I hunt for wicks, right? For the wick entries. Basically, like right here, I could have also already took a trade. So basically, right? Replay. Let's look at this. Okay, yesterday was bank holiday. I wasn't trading 9:30. This is Friday. Okay, let's just go back. Okay, June price action wasn't the best. Okay. But 9:30, where was 9:30? Right here, right? Well, now I messed everything up. Yeah. let's look at this one, right? 28th of May. I think I actually did 28th of May in my previous videos. Let's look at this one, right? Yeah. So you can see what happens, right? Even if we did take our long position right here, put 10 stop loss, yeah, you see what happens, right? Let's actually go back. So that's why if you are even trying to trade aggressive, put it at 30, and target, if it's 30, target I want the 3, so 90 points. Let's go on to the 5 minutes. On 5 minutes, you could have catched another trade, right? Same thing again. We had that took out, right? What do we have right here? Liquidity. We have this for value gap, gets inversed, entry right here, right? Stop loss, target opposing liquidity. I mean, it is not complicated. This is literally like the basics of trading, but that is how you can hunt for wicks. You can go and test it out, and maybe you can find a model just from these wicks, right? On the 50% consequent encroachment. Right. That is it for this video, guys. Tomorrow's video is going to be applying models to other assets. So we're gonna be going over Bitcoin and other like gold, showing out the same strategy, right? With the range, everything. So anyways, guys, I'll see you tomorrow, and thanks for watching.